Hey Big Bulls, welcome to another episode of Bullseye. Today we talk about where is the LIC stock headed, Aarti Industries' rare double upgrade, and why the NSE IPO has struggled to find its way. So let's start. LIC जिंदगी के साथ भी जिंदगी के बाद भी has been instrumental since its inception, making it the largest insurance company in India. But when it comes to its stock, well, that's a different story. Their IPO back in 2022 was a headline grabber for sure and has been the second biggest ever. But the stock has not quite lived up to the hype. Since listing, LIC shares have given around 14% return, not exactly the blockbuster performance many expected. But now, after dropping its Q4 numbers, the stock caught some good vibes. The 38% jump in LIC's net profit gave its shares a solid 9% boost on Wednesday. In fact, it's even got a few brokerages feeling bullish about the stock's future. They are pointing to better margins and attractive valuations as the main reasons the stock looks like it's in a sweet spot. Take Motilal Oswal and Macquarie for example. Both have similar sentiments. Motilal expects LIC's profits to grow because of certain policies doing well. Macquarie also agrees, though they are a bit careful about how fast LIC's profits will grow, but they think the stock price is safe for now and that LIC's cost-cutting and policy mix will help keep things improving. On the mix side, Goldman stayed cautious with concerns about LIC missing revenue, especially a 16% drop in key insurance segments, plus some trouble in the agency channel after new products rolled out in October. And if you look closer at the numbers, LIC's yearly premium income basically stayed the same. That's because lots of their products had to be tweaked and refiled, slowing sales. Plus, they sold more one-time policies which hurt their APA growth as per their management. Its CEO Siddhartha Mohanty also explained how FY25 has been both exciting and tough. We did great in the first half, but then had to tweak and relaunch products to meet new rules. That's what he said. Now looking ahead to FY26, LIC plans to focus on growing risk premiums and APE by double digits. They also expect their margins to improve. So with this focus, will LIC stock finally deliver the big win investors have been waiting for? That's something to watch out. When the whole China Plus One strategy caught on after the pandemic and got everyone talking in the business world, India's specialty chemical sector quickly became a key part of that story. This strategy simply meant that companies wanted to move some of their work out of China to avoid putting all their eggs in one basket and keep their supply chains flexible. Because of that, a bunch of chemical makers were expected to head over to India, start setting up shop here and even crank up production. And that was a big reason why India's specialty chemicals market was gearing up for some serious growth. But with every growth cycle, there's always a peak. And that's when global brokerage UBS downgraded one of these stocks, such as Aarti Industries, which is a top Indian maker of specialty chemicals used in everything from agrochemicals to pigments to dyes. UBS's main concern was that the chemical cycle was peaking and there were some risks with Aarti's energy segment outlook. But now, in a surprising turnaround, UBS flipped their stance on Aarti Industries from sell to buy rating, a rare double upgrade move that caught everyone's attention. This is as the brokerage believes that most of the bad news seems priced in. The chemical cycle looks like it's bottoming out with early recovery showing up, especially in the energy business. Add to that the fresh energy from new CEO Kotecha, who took the reins in June 2024. He seemed to be leading a strategic shift, focusing on market growth, cutting costs, and even building long-term client ties. And to look at its numbers, the company doubled its profit in Q4, that is Jan to March quarter of FY25, thanks to more sales, better pricing, and improved operations. Even its CEO said that FY26 is off to a strong start despite challenges as Aarti Industries stays focused on smart growth and becoming a top global player in the specialty chemicals industry. Now with the stock down about 35% from the August 2024 peak, will this growing buzz of upgrade and new CEO steering the ship help things turn around for Aarti Industries? The NSE is the biggest derivatives exchange in the world and one of India's most profitable companies, but yet it's still not listed. Yep, the stock exchange where companies go public hasn't gone public itself. It's been more than 8 years since NSE first floated the idea and investors are still waiting like it's the next season of a series that keeps getting delayed. Despite this delay, investor interest has not waned. In fact, it's only grown. In total, NSE now has over 1 lakh shareholders, making it one of the biggest unlisted companies in India, bigger than many listed companies when it comes to investors. Now, this rapid rise underscores just how much anticipation surrounds its eventual public debut. Big names like LIC, GIC, and SBI are some of the major shareholders in the exchange. NSE has got plenty of foreign investors too, like the Canada Pension Plan, Crown Capital, and a bunch of firms from Mauritius and Asia. Now, with so much buzz, you would think that the IPO would be a done deal by now. But what's holding it back? Not business performance, but a shadow from the past that is a high profile controversy that dates back to 2015. The roadblock came in the form of the infamous co-location case, where some speedy traders were accused of sneaking into its co-location services unfairly. The case even got the CBI involved, and a few top former NSE officials ended up getting arrested. As a result, this probe did not just kill NSE's IPO plans in 2016, it also got the exchange banned from the capital markets for 6 months later on. But amid the years of regulatory hurdles, there now seems to be a glimmer of hope. According to a recent Bloomberg report, NSE has proposed a settlement offer of around $118 million, that's roughly around 1,000 crore, to resolve the matter with SEBI. If accepted, this settlement could pave the way for a crucial no objection certificate that is a green light that NSE needs to move forward with its IPO plans. Encouragingly, signals of progress are already emerging. SEBI's new chief Tuhin Kanda Pandey recently said that the regulator is working with the NSE to iron out the issues holding the IPO back. So hopefully, this could be the long-awaited big breakthrough that the investors have been waiting for. That's it for today. Before you go, do not forget to subscribe and hit that bell icon. Thanks for tuning into Bullseye. We are taking a pause, but we will hopefully see you in a new avatar.